my point of interest, but it didn't. But
Yeah,
aside that, I didn't do anything.
yeah, yeah. Yeah, so for gold, let's have a look at gold. So for gold, so this gold analysis, so there was this live session I just did for the group,
You're not
and
showing the right screen. Maybe you're on the wrong screen.
uh, can you see my screen now?
Yeah.
All right. Yes, so you can see gold, right?
Yes. Yeah.
All right, perfect. So this was what happened to gold. If you go to 3-day time frame, you can see that gold created a low here and created a high. And one thing you have to understand is there's no guarantee that price will come to anywhere you want it to come to. The only thing is the moment you see price at a discount, any area of interest can facilitate for the market to continue to the overall direction. And when I say any area of interest, I mean like this February gap on the 3-day time frame.
Yeah.
And if you go to weekly time frame, you will see that we have a February gap here, and there's also a February gap here as well. Now, there's two February gaps. Which one is the market going to use? Now, nobody knows. And this is where a lot of traders start getting confused. Now,
Yeah.
you can look at this one. This one is above equilibrium. You say, I don't think this one will work. And this one is in discount. You say, yeah, this one will work. The people that control this market, they actually know that you focus now on waiting for price to come here to
Yeah.
buy. And they will manipulate it and they'll use another time frame Fibonacci gap and take the market to go to whatever direction they want it to go to. And if you go to daily time frame, there's a Fibonacci gap here, there's a Fibonacci gap here, there's another Fibonacci gap here, and another one here. So there's so many things to work with. So what you can do in cases like this is to scale down that Fibonacci gap to be at least one Fibonacci gap or maximum of two. An
Yeah.
example is you can now go through like 2-day time frame. 2-day time frame, you can see a Fibonacci gap here, Fibonacci gap here. You go to 3 days time frame, and on 3 days time frame, you can just see this Fibonacci gap resting directly at that equilibrium.
Yeah.
So the moment price is tapping into this Fibonacci gap, you can now just go to 1 hour time frame break of structure and look for.
How about the one that one on the 3 day? We still have that one at this thing there too now. The one above, the one on premium.
Yes, so there's this one at premium, there's this one at discount. But as you can see, already our interest is to buy below equilibrium.
Mm.
That's our interest. And now we can see that there's a fair value gap literally at that equilibrium. So that means here is a higher probability over this one.
Yeah. Okay.
So what I do is I just disregard this one because it's useless for me when I've already seen this one that is perfect,
Yeah.
literally perfectly resting at equilibrium. Because what you want to buy is below equilibrium. Now, you don't know how deep price will go below equilibrium. You don't know whether it will come just and tap the equilibrium. Sometimes it will come deeper. Sometimes it will even come as deep as this level, as if it wants to run the low and still reverse. Now, you don't have the information whether it will come to equilibrium a little bit or go into the midpoint or going deep. You don't know. And you don't need to know. And you don't need to try to predict that it will always come down here because it won't. Sometimes it will be
Mm.
very shallow and just tap the shallow bits and rally. So that means if you are now waiting deep here, you'll miss the entire trade. So after this mitigation inside this Beverly gap here, you can now go to 1 hour and look for a 1 hour break of structure. And right here, you can see we have a 1 hour break of structure right here. And after we broke this structure, you can see the last down close candle, but price still came down into, let's see what price came down into right here. You can see it came down into a fair value gap.
Yeah.
And then after coming into this family gap, we now saw a rally. So inside this area, what you do is to look for a break of structure on the smaller time frame. So our exercise today is going to be for you to go into your chart and show me the break of structure and how you could have entered from here using the lower time frame, and show me the lower time frame you will use, and then show me the break of structure and the area you use as entry and stop loss. So this is going to be our first exercise, and right here, I just want you to show me your entry inside here. So do you want us to continue, or do you want to do the exercise first, then we'll continue?
Yeah, no, it's better we do the exercise first. Yeah.
All right, then. So let me make you host and you can share your screen and we do the exercise so you can see how you can, like the thing there is you don't even need to catch the overall bottom of the market. All you need to do is just follow the trend. Even if you miss the low, you don't need to catch that low. You just need to follow the trend.
Mm.
So you can share your screen now.
Okay, that's what I mean. Can you see my screen now?
Yeah.
Yes, sorry. That uh, we started on the 3 days time frame and we're looking for a 1 hour break of structure.
So this was the 1 hour break of structure right here.
Okay. This right here.
Yeah, so this is the high. So what you can do is just, oh, you can't go into 3 day time frame on your chart, right?
Yeah. Yes. Yeah.
Okay, so all right, go to weekly. Now on weekly, you have to pull it to the current price action. Move your chart this way. Yeah, so right here, mark the fair value gaps we have on weekly. We have these two fair value gaps. There's still this fair value gap here.
Use a different line for that one. Let me just change the colors to make it easier. Okay, now I'll go
Yeah.
to I'll
Now you
check
go
out my
to,
daily.
yeah, just go to 1 hour. So you've marked the weekly fair value gap. So go to 1 hour and then look for 1 hour break of structure.
Reconstruction. Okay.
Now you can see right here. Now mark the highs and the lows and then look for the break of structure. So now I want you to outline where structure shifted after going into that weekly fair value gap. Where did the structure shift? Where was the last high that created the last low? And then where did it get broken?
Is high.
Exactly. So this high you outlined was the last high that created the last low that eventually got broken. So that was the shift in market structure.
Mm.
Now, what you do is you outline your point of interest